This is Commodity Wrap. I'm Tony St. James. How about we put a bow on the first 6 months of 2026? On Tuesday, we wrapped up not just the end of the month, we wrapped up the first half of the year, the second quarter, and now we're into the second half. I guess if you like soccer, we're in the second half here. If you are more of a football fan, we're in the third quarter. But the scoreboard, what's the scoreboard look like? Well, we look across most of the row crops. We saw higher moves on Wednesday, but when you step back and look at where we are and what we accomplished in the first 6 months of the year, we do see some positive areas here. Unfortunately, corn is not necessarily one of those. Brian Hoops is our guest, Midwest Market Solutions. Well, Brian, I didn't mean to turn something positive into a negative there, but the fact is you start the first trading day of this new quarter in higher territory.
Yeah, it's good to see when you reset everything kind of 6 month window and reset around the 1st of July. You do end the session positive. I think that was notable, and the funds were in there buying once again. Now, they didn't buy as many contracts as yesterday, and we had a better close. So I think the farmer had some orders sitting there with their elevators yesterday, maybe making some cash sale that capped the rally. But today it was 5-6 cent gains of both corn and soybeans. Funds were buyers of 7,000 to 8,000 contracts, and I suspect that we will see more buying taking place on Thursday. It's ahead of a 3-day weekend, and with that 3-day weekend comes a lot of volatility. I think you'll probably see a little bit more of this short covering that we've been seeing really since Monday's lows that carried over into Tuesday, Wednesday, and one more day of it would not surprise me. And then you talk about resetting. After that 4th of July holiday, a lot of the trade wants to do exactly that, reset, refocus, and may not be a lot of new positions being taken on tomorrow, but I think there will be Sunday night and Monday when the livestock and the grain markets resume trading. There'll be a lot of fresh positions, a lot of new either buying or selling, depending upon what side of the fence you want to be on, taking place after this 3-day weekend.
Okay, let's jump into some numbers here. I think we've traded all the numbers from both the acreage and the stocks report. Corn stocks, though, falling in below that trade range of estimates, or at least the bottom side of that. And then you go over to the acreage side, and for some reason, I guess the trade was kind of caught off guard with a winter wheat number. This is something, though, the winter wheat side we've been talking about for months. Why the surprise here?
Yeah, I'm a little caught off guard why there would be such a change from March until June, because we didn't really change that many spring wheat acres, and Durham acres are pretty much unchanged. It was more in that winter wheat category, and so USDA has high abandonment rates already. It may have been a situation that some producers reported that they tore up their winter wheat and reseeded it with something else, maybe corn or soybeans. That's about the only explanation that makes any sense. But, we didn't see a real big increase in the spring wheat, which I think some producers may be kicking themselves because it looks like we're going to have a really good spring wheat crop across the upper plains and certainly Canada because of all the moisture that they've had. That somewhat offsets the winter wheat crop that's not going to be very good across most of the country.
Okay. And then we get over to beans, and we saw a move higher here. You might have referenced this on the TV side earlier in the day, but have you heard this buzz? China maybe sniffing around?
Yeah, I mentioned that this morning, that there was a rumor about 6:30 this morning that caused us to spike up to 15 cents higher in the soybeans, that maybe China was in there sniffing around, and at midday, none of those rumors were substantiated. It really doesn't sound like it's going to end up being true, but it kind of spiked the market just for a very short period of time, giving us that 15-cent higher gains, and we closed only 5 cents higher, so about 10 cents off the highs of the session for the soybean market, which isn't a real impressive look, and it doesn't sound like that China business is going to be very accurate this time around.
Well, and again, since we're here in beans, what about bean oil? Moving lower, third straight session. This one's been pretty much hammered over the past month. Still one of the leaders when you look at what we've accomplished in the first 6 months of the year, but I don't know any other way to say it. Is it something that's fundamental? Is this tied back over to the pullback in energies?
I think you hit the nail on the head with the latter there. You know, it was one of the most bullish markets we've had almost all of 2026 until middle of May. And once we hit middle of May, it seemed like crude oil started to break and change its trend, and bean oil seemed to follow along. So maybe we got a little bit of a push with the higher crude oil prices, you know, as they spiked over $100 a barrel, lifted bean oil higher than where it needed to be. But I think we also are returning to maybe a situation where the canola crop is going to have more oil seed this year. And we have been building stocks. We know that. And from our crushing reports, we'll have a new report this afternoon. They'll tell us how many bean oil stocks on inventory we have. Those stocks have been building. So we've been crushing a lot of soybeans, building a lot of bean oil stocks. And so at some point, you know, our supply-demand fundamentals kind of become more equal, instead of us being in a strong demand market with tight stocks. We're in maybe still a strong demand market, but now we have more stocks to meet that demand. I think that's the case that we're starting to see in the soybean oil trade.
We're talking with Brian Hoops. Brian's with Midwest Market Solutions online, MidwestMarketSolutions.com. This is Commodity Wrap. This is Commodity Wrap. Our guest today, Brian Hoops, Midwest Market Solutions. Well, we continue to see a little bit of pressure here on the protein side, and talking live cattle, feeder cattle, and then we have hogs. Let's start with the cattle side. Brian, again, we've got cash waiting, I guess, for cash to develop. I haven't seen anything as of right now. So really all we have to go on is what we had last week at that 258 to 260 level. Why the pullback? It doesn't look like the market wants to move with cash at this point.
Yeah, it's a real struggle. Last 3 weeks, you know, we've had a very late week type of cash trade. I'm including this week in that comment because I think it's going to be late this week once again. We haven't really seen much in the way of interest so far this week. There has been some bids at 255 in the north, and outside of that, very quiet from the packers. They have been shutting a few plants down. We've talked about them as that news has become available, and there was another report yesterday of another plant, this one just outside of Omaha, that looks to be shutting down at the end of August. When we pull a lot of these plants out of the slaughter equation, their packers just don't have to buy as many cattle to keep those kills busy. They know they're faced with tight numbers right now, very negative margins. And this is their way to compensate for that, is to focus on maybe closing some plants that aren't very profitable and just killing less animals. And so they need less animals to work with, less demand for our product, and that's given us, plus the holidays that we've seen over the last couple of weeks with Juneteenth and the 4th of July this week, given us the packers a reason to kill less animals each of those weeks and not have as much demand. So it makes sense the cash markets pull back in here. As we go past the 4th of July, normally we get another spurt in the cash markets, the box beef, as buying starts for Labor Day. That is the last major holiday of the summer considered for grilling purposes. You know, go past Memorial Day and Father's Day and 4th of July, and then you're looking at Labor Day, and that buying is usually completed by sometime in the early part of August. So we've got another month here where we think maybe boxes could move higher, demand could be fairly strong. Cash markets may be very strong before things look to weaken as we go into the fall months.
All right. And before we wrap up, how about equity markets and the dollar? You know, Dow, NASDAQ, S&P, those gains, this would be year-to-date anywhere from 9 to 12%. Dollar with 3% higher compared to where we started the first of the year. Final thoughts here?
Yeah, you know, the U.S. dollar is one that really is attracting my attention anyway. Ever since the middle of May, we've had a kind of a breakout to the upside, scored 13-month highs. We had a little bit of a pullback the last couple of days, and it fell right into technical support and now has rallied off of that. And after, 4 or 5 days of lower closes, now we're starting to see a little bit of a bounce once again. A stronger U.S. dollar, of course, hurts our exports of grains and livestock and other commodities. It also usually puts a little bit of weakness into gold and silver, which have really pulled back off their highs. So higher dollar today, but yet gold, silver, grains all trading higher. Kind of a good sign for these grain markets, but longer term, I think we got to watch that dollar index. If it stays strong here into the third quarter, that could prove very detrimental to some of our export markets.
We're talking with Brian Hoops, Midwest Market Solutions. Brian, where do we find out more?
You can find us online at MidwestMarketSolutions.com. As always, you can give me a call directly, 417-501-5132.
Brian Hoops, President, Midwest Market Solutions, and this is Commodity Wrap.